All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let's get started with this analysis. We're gonna, like I said, we're gonna cruise through the charts this morning. I just need to pull up the bias chart. And thank you guys all for the well wishes. I appreciate it. I'm definitely not 100%, but I'm a whole hell of a lot better than I've been the last couple of days. That's for sure. And um, uh, let's go through the chart. So here's the euro dollar, and okay, so the euro dollar 50% retracement coming into play. All right, and now there's a couple. This is, in my opinion, okay, so there's a couple things I want to say about the euro. So a lot of people are wondering why the euro is under pressure. What's happening with risk aversion? The euro is starting to come under pressure. I think you can look at it a couple of different ways. You've got the euro dollar that is probably feeling a little bit of the possible risk effect of, the euro dollar is under some pressure because of maybe the impact that Brexit may have on the rest of the Eurozone. Like what other EU members may decide to have a referendum themselves and try to exit the Eurozone type of situation. So the disruption to the EU might be affecting the euro, the potential. Okay, that's one. A lot of people like myself feel that maybe the dollar is starting to get some safe haven flows, meaning, the stock market's under pressure, the dollar is starting to pick up a little bit of steam as a result. Okay, now does that mean that, that I'm right or whatever? I don't know. What I will tell you though is, what we can't deny is stocks have been coming down and the euro has been coming down with it. Over the course of the last couple of days. All right, so does that mean if the stock market bounces, the euro is going to bounce too? I'm not too sure, but I will tell you that we're coming into some pretty key support here. There's the 109, 109.50 is the 50% retracement, and I think if Paul mentioned it, mentioned it already, the 618 is right here. You can see the 618 also at this 109.64 level, right where we're currently at. That's the 618 retracement from the previous low back in January. So regardless, there's a lot of support that comes in here around the 109.50, and Paul made a good point that there's a lot of reaction. There's been a lot of reaction down here. You can see, just I'll highlight it. Boom, 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 boom. A lot of reactions down here, right here. Okay, meaning that we'll probably end up getting some sort of bounce, around here, I would think. Now, does that mean you should be going long? Yeah, I don't know. I mean, if you're on the short side, you might want to, maybe want to take that into account. Personally, I think that, if we got down to like the 108.50, which I know is about 100 pips away from where we're at, I would take a shot at it here, personally. Okay. I'd be looking for a long right here if we could get it. The question is, are we even going to get it? But right now, I'm going to write down that 109.50 as support. And I know we're right there. I understand that. And if you guys want to take a shot at it, I mean, I don't think you have to risk a whole lot being on the long side here. If you get on the long side, you might be taking a 20, 30 pip risk today. It's probably not a bad idea. I mean, if you're thinking we can bounce back to the 110.30, 110.40 level, All right, now let's talk about that. Where would resistance be? So if you got support down here at 109.50, resistance is right here, without a doubt, actually. Okay. You want to take the downside pressure off the euro. We have to get right back above here. That's a while away, but 110.65. I mean, we have to take out 110.65 to take this downside pressure off. 110.65. 65. But if you think about from a risk reward standpoint right now, and I think we can push us right back into a range, in the euro dollar, we're just in a big range. I think we had that on Friday too, but just want to make sure that you all are aware. If we bounce here, like if you think about from a risk reward standpoint, if you want to be long here, okay, get long right now. I'm just throwing this out as an example. You got to stop below and I'm not going to trade it. I don't feel like trading today, actually. Just to let you guys know, you're gonna have to really, I'm gonna have to see something jump out and bite me in the face before I trade it today. I'm not in the mood to trade at the moment because I'm not feeling well. You guys know when you're not feeling well, it's not the time to be initiating trades. Just if you guys don't know that, it's true, and that's why I'm not going to be trading at all unless something really, really just jumps out at me. So, like, if you want to take a long here, and then you got to stop, like, let's say below, like, I don't know, 40 or so, 35. You're risking, let's say, 30 pips to get a move back up to, like, let's say 110.50. I mean, you're risking 30 or 40 pips to make 80 or 90 pips. It's not a bad counter trend risk reward. Just take a smaller position, if you're going to do it. All right, let's go take a look at the cable. So the cable, scary. Price action is extremely scary here. I just showed you that there's the 127% extension. Listen, I think it's crazy that we closed here on Friday. To me, we closed right here and we opened there and are here right now. I mean, this thing has moved 600 pips or 530 pips lower in just a few days. Unreal. But I mean, if you ask me, it looks like we have more downside. If there's a bounce here, I don't see any technical reasons why we should bounce. If it bounces here, it's just more of like a random bounce, right? I mean, I don't know why we'd bounce here, but if we do, it's going to be some random reason. Probably is not going to be sustainable. So first of all, I can tell you this much: resistance is there, no matter what, is 140.50. Period. End of story. If you guys want to short, the cable, that's where you're a seller. Okay, and we are in a bearish trend now. Okay, because if I like, me, I don't like to chase anything. So if I was going to short it, I'd be shorting it right there. All right. That to me is like a layup trade. Like if we got to bounce back to 40, this is one of those. Maybe if we got back to 40.50 and I'm still awake and coherent, I might actually short the cable there. Okay, because that's a basic technical analysis. Previous support, key support, is going to be resistance on the way back. Selling it at 140.50 or 140, whatever that is, 140.60. The low there is 140.56. Yeah, selling at 140.50 makes a lot of sense. I have to imagine everybody and their mothers, brothers, uncles, sisters trying to sell up there too. Okay, it's not just you. There's going to be a bunch of people trying to sell there, so that you're going to get a lot of pressure as you get up there. Okay, now support, 161% extension, and let's go over to the weekly chart. 161% extension of this last move of 2015 low to high. Is that the high in 2015? It was. That comes in at 137.74. All right. Matter of fact, I bet you 127% extension right there. Oh no, that's where we're at right now. Oops. That was what held us the last time around. Okay. So 137.75. I mean, if I was gonna take a pop shot at it to be on the long side, that would be there. All right. And as you can see, we're 100 pips away from there. So and we may never get there. We may never get there, but that's going to be pretty critical support on the way down. And like I said, if I wanted to play the pound long, I'd wait till we get there. All right, let's go over to the Swissy. Now, I talked to a couple of guys and gals in the chat room this morning. I was just telling people in the chat room that you got to be careful about playing the Swissy on the long side right now, meaning short Swiss franc, long Swissy. You got to be careful. Why? When you're talking about risks in Europe, the UK is part of Europe, okay? Integral part of Europe too. When you're talking about Europe and you're talking about risks in Europe, the Swissy becomes the safe haven currency of choice, not the dollar. All right. So you have to be very careful about playing the dollar Swiss to the long side right now. While there's fears of a Brexit and people are talking about it, and you might say to me, well, Blake, that's you're talking June. The referendum's in June. It's February, not even March. I know that, but it doesn't matter. But I'll tell you what, if there's a Brexit, like an actual Brexit, the Swiss franc's going to come out of its shoes. The dollar Swiss is going to fall pretty aggressively. But you'll notice that I was just telling the guys and gals, look, the Euro Swiss was above like 110.50 last week. Hell, we were up almost at 112. I mean, look at it reverse. This shows you that the Swiss franc is in demand right now. Okay? It's in demand. So be really careful about playing this dollar Swiss. All right. As much as I'm a seller of Swiss francs, it's not something that I'm too comfortable doing at the moment. All right. So right now, I mean, it's pretty clear as far as I'm concerned, as far as the dollar Swiss goes. Where your levels are at. Okay, it's right here. That's obviously key support that comes in at 98.90. Resistance right now is parity. Okay. Let's go to the dollar yen. Okay. Here's the dollar yen. Now, Paul made a good point. Futures continue to come down, but the dollar yen's not going down anymore. So we're seeing a bit of a divergence there. Now, I got out of all my yen last week or whatever. It was great. I really, it's been doing really well trading the dollar yen to the short side and playing long yen. I haven't been in the yen since last week. Now, what we're holding right now is obviously very key. Here, let's get rid of this. We don't need this right at this moment. That was just more for showing you where the distance it could travel. Let me grab this red line here if I can find it. There we go. Okay. So the 786 retracement is holding. You can see it right there. Okay. 786 retracement. That is holding. We're on it. 111.80. This is support. 111.65. And as long as that holds, and I'll tell you guys, if you think that the equity markets might be a little oversold here, maybe there's a little overreaction to the Brexit or whatever. Playing it to the long side here is not a bad idea, as long as you can keep your stops really tight. Okay, if we break through there, we should revisit these lows. That's support right now, and it's going to be key support. Now resistance, I think, is just right through here, because that was a 618. You can see it on the way down, and it held us. I know we overshot. That came in at 112.50 basically. We overshot it, but we held. Bounce. Then we fell through it. We knocked our head up against 112.50 again. So 112.50 is going to offer resistance. Roughly. It's you could say, well, what about the spike low down there? Yeah, but I'm just going to give you roughly around 112.50. I think 112.50 should offer decent resistance, especially if you guys are like, well, I'm not playing the dollar yen to the long side, which would be my take, because I personally don't like playing the dollar yen to the I personally don't like playing the dollar yen to the long side, because I know we're in breakdown territory. We're in a big head and shoulder pattern, right? Don't forget this. We're in a big head and shoulder pattern. I think we're targeting like 105. So I personally don't like playing the long side. Okay, what I'd rather do is I'd rather play the short side. So I'd rather, see a rally back to 112.50 and try to get short up there. That would be the way I'd play the dollar yen if I'm going to play it. All right. For those of you that think that you're going to get a bounce, you got your risk is pretty well established. Your risk is below 111.45 or whatever that is. We break through that, or 111.65, excuse me. You break through that 111.65, and it exposes the a move through the downside here. All right. Let's continue on. We gotta get cruising here. All right, here's the dollar Canadian. So the dollar Canadian, we managed to break, and the guys in the chat room were noticing this yesterday, which is a very good observation. I think Don in the chat room, he saw this, and it was a good observation right through here. You notice that we broke that to the upside. Now, I shorted the dollar Canadian on Friday. I guess it was right here. Okay. I closed it on Monday down here, which was nice, because that offset that, because I had I think it was like a 3/4, close to a full-size position in the dollar Canadian short, because it was a nice profit. Offset my pound New Zealand, excuse me, and pound Aussie, actually. Those losses that were smaller positions, but they still were sizable because of the the number of pips that I lost. So it was nice compensating that there. Now, the thing about the dollar Canadian is we are pushing this upside resistance, and you see that crude oil is extremely weak. So just trying to find where the next, well, I guess support's easy. Support's going to be right here. Support was the retest of this trend line right here. See it? So that was that's going to be at 137.70. That's support. Resistance. Maybe we could make it up there, 139. So that's going to be resistance today. You got to watch that little shooting star though there, if you're on the long side right now. We're in a range. Here's the Kiwi. All right. So let me get rid of these. This is drawn from last week. So Okay, what happened here? Wow. So we had a failed breakout attempt for the Kiwi, huh? That's not good. If you're long, that's not good. See, we had that down sloping trend line. Challenged it. We couldn't close above it. See that? We couldn't close above it on, I guess that was Monday, right? Here's Tuesday, here's today. Yeah, so we couldn't close above it. Failed breakout attempt there. That's not good. So the support is really going to be important on the way down. See, when you get a failed breakout like that, tends to lead to a breakdown. Failed breakouts lead to a breakdown. Failed breakdowns lead to a breakout. Tend to. 65.50 is going to be really key support. I'm going to write that down today. So 550. Okay. Resistance. I don't want to write all the way up there, although that is resistance, but you'll find resistance before then. Right back here. So any rally back here, back to 66.50 or so. 66.50 will be resistance. Roughly, it's not great resistance. This is going to be pretty key support. Let's go over to the Aussie. I'm trying to get through this really quickly because we got trading points coming up. All right, so here's the Aussie. Let me take a step back for a second looking at the Aussie. It's very similar to the Kiwi as far as the false breakout. Okay, because we had this trend line, right? So not only did you get a false breakout here, right? False breakout there. Then you got a shooting star yesterday, which, gosh, I wish I was around yesterday. I would have shorted the Aussie. Then you got this false, that false breakout too, right? On top of it. Huh. Okay. Yeah, that's ugly. Right there. That was ugly. How many people did that sucker in getting long? I know Paulie was talking about the Aussie rallying, a couple of days ago. I mean, how about, how many people got, you have to think that candle right there was green at some point. How many people got sucked into that trade right there? Ooh, I'm getting long, breakout. And then, they're getting smashed. So that puts this support really into play. That comes in at 70, 75. I know it's not for a while, but that's going to be really key support on the way down. 70, 75. Okay. Now on any rally, right through here, $72, $72.10. I'm going to write down at $72.10. It's resistance. Anywhere up there, you're going to find some sellers. So if you get an opportunity to sell the Aussie up there, I don't think that's a bad place to be on the short side. So, like if equities rally, today, if we get a little rally in equities, probably not a bad place to be on the short side, in my opinion. Okay. Let's go over, and I'm going to do the dollar index really quick. And then I'm going to do the peso because the peso is not quite to my sell zone, but it is the peso is something on my radar. Okay, so here's the dollar index. Let's go over to the 4. We just hit a 618 retracement. No, we didn't. We came really close. Okay, so 98.05 is a 618. This was a wedge. You can probably see it here. I'm gonna draw it real quick. See this little wedge here? There's the okay. See it right there? See that wedge? So support will be back down here at 97.50. Resistance is 98.05. 750, 98.05. We're still in a range, big range in the dollar index. Let's go take a look at the peso, because I don't think the Nordic currencies have done much. I may be wrong, but so the peso. Okay, as you guys know, I'm looking for a short in the peso. Any move up here to the 1857 level, the 38% retracement. We just came into resistance at 1840. I think 1840 is going to be resistance right now. 18 is major support. If we break this 1840, that's going to clear away up to 1855. Now, that's going to be on some risk aversion. If the market gets risk averse, that's where we're going. Okay, as we're going up here. But it looks like risk aversion might be moderating for right now. But 1840 is going to be resistance today. What is this? 1836. I'm sorry, it's not 1840. It's 1836. 38% retrace or 24% retracement. 1836 for the peso. Now, again, I'm gonna reiterate, and I hope I'm telling you right now, I hope we break this 1836. We break it and we go to 1855, I'm gonna short the heck out of this thing. I'm telling you right now, that is one trade that I may not be trading today, but that is one trade that I will be looking to take. Okay, we're back in a range after being bullish for a long time. 18, major support, as you guys know. Okay, I'm going to leave it at this. I'm going to give you guys a 5-minute break. When I come back, I'm going to bring Joe on, and we'll have our interview with Trading Points, the highly anticipated interview. So you guys don't go anywhere. I'm so happy to have you all here. I'm happy to actually be here after being in bed for the last several days. So don't go anywhere. Be right back.